Hopefully the microphone will stay on. Can you all hear me? Good morning. How about the translators? Okay. All right, so I'm the project director of the Mekong Business Initiative. It's an unusual project. We're sponsored by the Asian Development Bank. Does everyone know what the Asian Development Bank is? Okay, it's, oh wow, okay, good. It used to, people used to jokingly refer to ADB as Asian Dams and Bridges, because its main business was supporting infrastructure development in the form of dams, bridges, roads, things like that. But most recently, we've also entered into financial markets and promotion of innovation, and we see actually in our region, in MBI, by the way, we work across 4 countries, so it's CLMV, Cambodia, Laos, Vietnam, and Myanmar, 4 very different countries. But for some reason, they tend to get grouped together, and we have operations across all 4 countries. Very different approaches, actually, in each country. Let me just quickly go through the slide deck here. So we already mentioned we're a collaboration of ADB and the government of Australia, so we get our funding from the Australian government. Okay, our approach is a little bit different. So we work directly with the private sector to promote innovation. As an example, we're now working with the city of Ho Chi Minh, the government of Ho Chi Minh, to promote an innovation economy. It's a very forward-looking group of leaders here in Ho Chi Minh and also in Da Nang. We're also working with the government of Da Nang. They're trying to promote business incubators, business accelerators, and to develop small and startup enterprises in their cities. So we're a little bit more demand-driven. We're working across all the 4 countries, and we have offices in the 4 countries. I don't want to spend too much time on that. I mentioned the other area where we're working, which is innovation policy and laws and regulations related to startups and business development. That's on the one hand. On the other hand, we're also working on the financial sector side. And this is my main focus. I have a background as a banker. I used to be a lending officer before I started working in development. And I came out to Asia about 25 years ago. And I've seen some progress in the banking sector. I enjoyed the presentation from the gentleman from Momo because I think it helps to underscore that there's a lot of work to be done in Asia in expanding the financial sector to cover most people. So one of the things that we see, for instance, in Vietnam specifically, is that banks are not very good at serving small businesses. In fact, they're not. Many of them are not even interested in serving small businesses. And when we look across the region, we see that there, in other countries, there's a more vibrant, innovative microfinance sector, which over time tends to move up and serve small businesses. Now that microfinance, commercial microfinance sector is completely absent in Vietnam. So there's a lack of innovation in the financial sector in Vietnam, particularly as it relates to small businesses and their borrowing needs. So one of the things that we're very interested in, and I'm not going to take up too much more time because we have, Tobias has an excellent presentation on peer-to-peer lending. But we've become very interested in peer-to-peer lending because we see that as a way to use new technologies like the mobile phone to combine that technology with all of these innovations on big data and data analytics. Yesterday we were meeting with a company here called Trusting Social. These guys are, it's a Vietnamese company. It's a recent startup. These guys are on the cutting edge of data analytics. They're actually working with banks. They're using data to develop models that help financial institutions to lend. And those models are superior to the way that bankers like me used to do it in the old days. So there's a lot of good innovations that can be leveraged to expand access to finance, and particularly for SMEs. The other thing is that, as I was mentioning, that the commercial banks here are not particularly interested in the sector, but we think that there's an opportunity for traditional commercial banks to actually partner with some of these innovative FinTech peer-to-peer lending providers. So that's something that I think is relevant for Vietnam. In our case, we're interested in innovation and bringing in innovation, but I hesitate to say disruption, because I think because there's so little lending to small businesses in Vietnam, maybe there's nothing to disrupt. So maybe we can just start with some of these new FinTech technologies that allow us to do lending, like peer-to-peer lending, through some of the hybrid models. So that's something that Tobias is going to explore in a little more detail. So there's 3 specific things that we're working on. We are promoting FinTech incubators and accelerators across the region. I think I don't want to go into too much detail on that. Tobias actually is working at a accelerator program in Singapore. He can talk a little bit about that. We're also directly supporting FinTech startups in the peer-to-peer lending space. In fact, we have a customer in Cambodia called the Cambodia Investment Club. It's a group of 200 entrepreneurs that lend to each other, actually offline, but now they're developing an online platform to make that a public marketplace lender focused on SMEs. We think that's an exciting model, and we're looking for partners in Vietnam to do something similar. Finally, this whole area really needs a thoughtful approach to regulation. When you're lending money and you're promoting financial inclusion and you're out in the public financial markets, there is a role and a need for thoughtful regulation. And one of the, there are some bad examples of that we see in other markets. As an example, in China, there's a lot of peer-to-peer lenders. I think there's over 1,000 peer-to-peer lending platforms in China. And every week there's another story about a Ponzi scheme or a fraud or something related to peer-to-peer lending that's kind of giving what is an interesting and exciting platform or potential business model, it's giving it a bad name. So we feel that we have a role through our project to help educate regulators in the region about how to thoughtfully both manage and promote peer-to-peer lending. So we're going to develop a FinTech regulatory boot camp. We'll launch that in November. We'll do it in Singapore. We'll have regulators from across the region come and participate in that. We'll have Singapore MAS will be one of our sponsors, along with the Australian regulator. Their approach is what they call a sandbox approach. So if you have an idea for a peer-to-peer lending business model, for instance, you can go to the regulator that has a sandbox approach, explain the idea, and they can give you a provisional license to develop the business idea, and then if you can show that it's effective, that it's not a Ponzi scheme, that it's providing utility, they'll give you a license. So this was pioneered by the UK. It's been adopted now by MAS, by Australia, and many other governments. So that's what we're promoting. So I've taken up a lot of time. I'm going to turn it right over to Tobias. So Tobias Fischer is a very young man and a very thoughtful young man. He has been working in Singapore for the last 3 years. Prior to that, he got his start in the financial sector working in the insurance business, but he has become both an expert on the incubation and acceleration of FinTech startups, as well as the emerging regulation situation around regulations on peer-to-peer lending in particular. So without further ado, I'm going to turn it over to my colleague, Tobias Fischer. Thank you.
Before I go into the presentation, I would like to quickly thank you for this opportunity to discuss some perspectives on financial regulations in the digital age. In my view, this is a topic that has not received the attention that it deserves yet. So let's get right into it. Recent developments in finance challenge regulators all over the world. FinTech startups are on the rise, and it is not clear what kind of rules and regulations is needed. This results in a regulatory gap between banks and fast-moving fintech startups. So yeah, here we see the regulatory gap between the banks and fast-moving fintech startups. To give you some first-hand insights on this matter, I let the experts speak for themselves. I've collected a couple of quotes from leading economists. Does anyone know who has said these? And also, to be fair, I must admit, these quotes are not from our time. I've collected the quotes from the wrong decade because I wanted to highlight that economists have already formulated optimistic viewpoints on the fintech movement 15 years ago already. Back then, it was just not called financial technology, it was just called financial innovation. Between then and now, we have experienced the worst financial crisis since 1930s. These quotes should demonstrate that the financial world has already seen a major wave of financial innovation. Also back then, experts around the world hoped that these innovations would play a positive role for the financial industry. Unfortunately, that was not the case to what people thought. But at least today, we can draw from historical experience to come up with an adequate regulatory response to this rapid pace of financial innovation and technological progress. So if we focus on what regulatory challenges fintech companies are challenging and facing, we can identify 4 key challenges, which we see here on the left side, which is the ambiguity and confusion of regulations. It's really hard to understand the current regulatory framework, the over-regulation of incumbents that makes it really hard for fintech startups to collaborate with, the challenge to regulators of the risk of an uneven playing field, and the ever-increasing regulatory compliance for incumbents as well as for fintech startups that makes it hard to even start off. Therefore, the role of regulators and public institutions needs to change. We have identified 4 key areas where we think financial institutions have to change, which is focusing on the corporations. Regulators have to leave the role of the cautious custodian behind them. They need to create an environment that is collaborative and cooperative for the fintech startups to work with the regulators. Furthermore, it's the approachability. I've spoken to many startups, even in Singapore, and if they ask me, like, who is the regulator that we should speak to? Yes, of course, everybody knows it's the Ministry of the MAS, sorry. But the problem is that they do not necessarily know who specifically do they need to talk to. So regulators need to create a kind of a hub or a single point of contact where people know these are the experts they need to speak to if it comes to financial innovation. Furthermore, it's about reliability and commitment. Some of the regulators, they have taken the approach of the sandbox environment, where you can have experiments in a very, very close environment where you can reduce the level of risk that's involved there. So this is another approach where regulators as well as public institutions have to change. And furthermore, it's also about timelines. Myself, I've been dealing with the financial authority in the Netherlands, and it took us 12 months to get the consumer credit license in the Netherlands. So it's also about breaking up internal cultures, accelerating internal processes, and reducing the level of improvements that regulators then need to go through. And lastly, it's about harmonization of regulatory frameworks, not only on a national level, but also on an international level. If we talk about P2P lending, for example, we've seen regulatory approaches that go from regulating the P2P lending platforms to not regulating the P2P lending platforms. So it's also about like finding a harmonization strategy on that side. Putting the spotlight on P2P lending itself, think we have seen that it is a global phenomenon with the leading markets in US, China, and the UK. If we look into Southeast Asia, particularly into Singapore, peer-to-peer lending or alternative finance is almost non-existing. If we do a basic recap on what peer-to-peer lending is, peer-to-peer lending can basically structured in two different models, which is the marketplace lending model and the balance sheet lending model. So the models basically differ mainly by who is doing the lending and who is taking the default risk. So in the marketplace lending model, loans are being originated by the platform itself and being sold to retail or institutional investors. Therefore, the retail investors as well as institutional investors bear the default risk on their own. Whereas in the balance sheet model, loans are also originated by the platform, but the loans itself are retained on the balance sheet of the platform, or the loans, as you can see here, are retained on the balance sheet of an SPV that has been set up for that particular purpose. Therefore, within the balance sheet lending model, institutional investors mainly only bear the risk to a certain amount of defaults. If we look into the regulatory developments in Southeast Asia, we have seen that Malaysia, with their crowdfunding framework as well as peer-to-peer framework, is definitely leading the game, whereas Singapore is always tries to be on the forefront, but currently taking a slower approach than the Malaysian government. We see that regulations in general is still at an embryonic stage, so it is still a very, very infant market. Even if we look at the lending volume in 2015, we had marketplace lending mainly focusing on SMEs, just in around 100 million euros, whereas most part, or the vast majority of that lending volume has actually been originated in Singapore. I don't want to go too much in detail into that slide, so I'll skip that. So what is important when you want to build a marketplace lending model or a peer-to-peer lending model here in the region? We have identified a couple of areas like the credit model. How do you do your scoring? How do you make sure that the risk that's been underwriting is actually reliable and is actually not too high for the lenders or the loans that you disperse through your website? So do you buy it from a bank, or do you develop a new scoring model like the guys from Trusting Social, for example, did? What is the capital structure? That is basically touching on whether you go for the marketplace lending model or you go for the balance sheet model, whereas the balance sheet model is obviously more capital intense. What is your target market? Are you focusing on consumer lending or are you focusing on SME lending? And if you do SME lending, do you do supply chain finance or do you do trade finance or invoice factoring, for example? What are your marketing channels? Are you doing content marketing? Are you going through brokers? And if you do content marketing, is it paid, unpaid, or how do you get access to customers? In terms of regulations, we've seen a couple of approaches. There are three leading approaches where you are basically be considered as a marketplace, so you don't have to be regulated. In some markets, you have to apply for a license, and in some markets, it's also possible to partner up with a bank and white label their banking solution. What is your product offering? Like, what are the terms and durations of loans that you provide on your platform and that people can actually take out? Lastly, probably also one of the most important aspects for investors, how do you structure your collection process? What happens if a loan is late? How do you do collection? Do you just send letters? Do you send people? Like, what is the process over there? You know, in order to launch a sustainable lending platform, we have identified 4 phases, where basically in the first step, you build the foundation, you take your idea and build a viable business on top of that. And the second step, you basically redefine core processes, where you have tested your idea, you have done some lending already, but you see that you need to change, you need to tweak your business model because the market is just different than what you've assumed or what you've expected. And the third stage, it's about expanding and innovating your product. That could basically be innovating new services, expanding the features, moving from SME lending towards consumer lending. And lastly, you need to look beyond core lending. So we've seen that already in the US or in the UK, there are a couple of platforms who are already doing more than just lending. So you also need to look beyond your actual core business. Talking about regulatory priorities for regulators in peer-to-peer lending, I think there are 3 main risks that need to be taken care of, which is fraud minimization and central data repository. You need to reduce fraud by having the right regulations in place in terms of AML as well as KYC requirements. Secondly, it's about fee transparency. You need to ensure that platforms transparently show the fees that may occur to borrowers as well as investors on their website. This is really important because otherwise you could be considered as a loan shark, and we don't want to have more loan sharks already here, right? We want to cut out loan sharks, money changers, payday lenders out of the business by having absolute fee transparency. And lastly, it's about management incentives. So what do I mean by that? By that I basically mean, if we look into China, for example, what is the valuation driver of a peer-to-peer lending platform? It's about how fast you can scale your loan book. If you scale your loan book, you do not take the risk measurements anymore that it actually needs to build a sustainable business. So you need to make sure that management incentives and peer-to-peer lending are aligned with the overall strategy and the overall framework. This is just where I see peer-to-peer lending in the next 10 years. So expect that peer-to-peer lending, consumer and SME lending, is going to be 25% of the overall lending volume issued in different countries. So I don't want to go into too much detail. I'd like to conclude with 6 takeaways. The first one being that FinTech or FinTech startups is a really, really powerful tool that should not be underestimated by regulators, that should be embraced by regulators by opening conversations and having a very collaborative approach. Secondly, it's about that regulating bodies, they need to create a positive and cooperative environment that promotes innovative solutions. And of course, there will be failure. That is just the nature of innovation. There will be failure, and it is on the regulators as well as on the whole ecosystem to define an environment where we can reduce failure and where we know how to deal with failure. My 4th bullet point basically says that regulators, their main responsibility needs to be to ensure protection of individuals and to reduce systematic risk. Peer-to-peer lending platforms will systematically be important as it enables the government to specifically target certain segments of the economy, which is important for regulators as well as for the country itself. And lastly, it's about the platforms itself. I already touched on that in my last slide. Platforms need to build a stringent risk and fraud prevention processes, so we do not see the same developments as we recently saw in China. We don't see any Ponzi schemes. And we enable and accelerate building sustainable lending platforms. Thank you very much.